Welcome, Faisal. Another set of results, and I guess at first glance, results out yesterday morning, but at first glance it looks like lovely growth in sales, but the profits seem flat. Is there a story behind that?
Yeah, I think it's fair to say that the results are, when you peel away certain things, are better than it seems. Sales are up primarily because of an acquisition we made in the prior year, which is going extremely well. We've been hit, however, by adverse FX or foreign exchange and polymer price movements. So if you correct for those two factors, profits are up, EBITDA is up 29%, EPS is up 7%. And we've got some nice growth going on in the bearings business, which has taken a while to come through, but it is now coming through. So there are some really good signs, I think, underneath the very basic results you see in the highlights page.
Mm. And I guess the polymer prices are reflected by the oil and gas.
Yes, well, polymer, absolutely. Polymer prices are a law unto themselves, or have been over the last 5 years. If we go back 18 months, oil prices came off, and that led to a reduction in polymer prices. But then we had a number of plant closures and force majeure type situations, and so supply of polyethylene suddenly became very constricted. About, when was it? It would have been about April, May, June, and prices shot up against the grain, really. And whilst we're able to pass those price increases on, it does take a month or two. And the severity of the increase meant that for a couple of months our margins were squeezed. Mm. And that has held profits back in the period we're reporting on. We don't think it's a long-term trend. In fact, it definitely isn't. We've already seen prices come back the other way. So, in the long run, we think probably raw material prices are on their way down following the oil price, but there'll be some ups and downs along the way.
Yeah. And because of that sort of 2-month lag effect, you've probably got the benefit now as the prices come down.
Yes, we will. It's a little early to say how much benefit, but we should get a bit of a benefit as prices soften, I think. So
that's good.
We'll keep our fingers crossed for
Bodes
that.
well for H2, we hope.
Yes.
And it appears, I mean, just generally looking at the statements, the outlook, etc., it seems various divisions have potential for new business, which is always good to hear.
Yes, I mean, we acquired Flexipol a year or so ago. That business has some excellent products, specialist patented products, and we see great opportunity to expand those. They've developed some new films and have a new conversion line going in for a new product area. So that's an exciting area for us. In the bearings business, we've got a great pipeline of business that is won but not yet into production. So that's now £4.3 million of sales on an annualized basis that should come through over the next 3 to 4 years. And that pipeline's growing. So it was 3.5 million 6 months to 9 months ago. It's now 4.3. So that's a good sign too. We've won a lot of business in mandrels where the market's been difficult, and despite a difficult market, we've held our position through new business wins. So, yeah, I'd say overall we're happy with how the top line is going and will go in the long run.
And it looks like between the businesses there are potential savings that can be made by helping each other, I guess, working within each division.
Yes, I think that's right. In the films business in particular, or films division, we've now got 2 businesses that operate more or less in the same sort of way. They do produce different products, but they can share raw material purchasing. They can cross-sell one another's products. We can share the advantage of electricity prices, buying greater bulk. So there are some good synergies. We've been working on those since the acquisition over the last 12 months. The full benefit of those synergies will come through next financial year. We're getting some benefit already, but the full benefit on an annualized basis will come through next year.
And I mean, I have got quite a few questions that have come from individual investors ahead of the meeting. But when I first met you, which is I think 6 or 7 years ago now, and you know, we looked at the business overall, and indeed we had an interview about 3 years ago where clearly acquisitions is pretty crucial to the company for its growth, and the original intention was for it to be a company that acquired lots of businesses. How do you feel over the years that's developed? Are you now very happy with where you are compared to what the original intention was?
Well, we're still on strategy, if I can put it that way. We have had various phases of our evolution and development. So between 2004 and 2008, say, we made probably about 10 acquisitions, different sizes, and built the business, listed it. And obviously the world was a different place. We all remember, well, not all of us, but some of us will remember those days. We then went into the crisis and the post-crisis, immediate post-crisis phase. That was probably sort of 08 to about 11, 12, frankly. And that was a difficult period, but it was a difficult period for a lot of companies. And whilst we stopped making acquisitions and concentrated on trading, on paying down debt and producing cash, it was a hard, you know, it was hard yards type, using a sporting analogy, hard yards type sort of 3 or 4 years. You know, that was not what we expected would happen. But I have to say, there were a lot of people who didn't realise what would happen in the crisis. So that was unexpected. I think since then, since about 2012, we've started to get back on looking at acquisitions and getting back onto the front foot, as I was putting it, as opposed to defending. And we built some business in China. Some of that was through acquisition. We did the Flexipol deal. We're looking at a few deals at the moment. And you know, I think we are back in a position where we can look at acquisitions and to get back onto what was the original game plan. When we listed, it was never the intention to be a 30 million market cap business. The intention was to get relatively quickly to 100 million plus. Obviously, as I say, the crisis got in the way. We're now trying to get back on track.
And I mean, acquisitions always have to be paid for. Investors generally worry about debt. I mean, how do you see the balance of debt, equity, and any other form of paying for them?
Yes. When people say that people are worried about debt, I mean, it depends on the climate, doesn't it? I mean, I remember back in the 06, 07 period, shareholders were saying, yeah, use as much debt. Debt's great, you know. And then we get into the crisis situation, everyone's changed their minds suddenly. So I think you have to try to see through that. I mean, our view is that in the long run, 1.5 to 2 times EBITDA is a decent gearing level for our sort of business. It's a cash generative business, fairly stable, quite diverse. So there are a lot of risk management measures or issues in place. And in the short run, sort of following an acquisition, we might go up to 2.5 times maximum. But hopefully that would be paid down within a year post-acquisition back to 2 times or less. I mean, that's the sort of way we think about gearing. And to try to pay all the debt off would be actually, from a capital efficiency perspective, hugely inefficient, frankly. So I think an appropriate level of debt is okay.
Let's go on to one or two of the questions that have come in from individual investors who can't meet with you but want to ask you questions. Some of them are completely different and do require a little bit of thinking. But one here has mentioned you're investing in the distributors of the creasing matrices. This seems to be a pretty unusual move and the potential for significant conflicts of interest. I'd be keen to know, he says, what you have in mind and what scale of investment, and whether you feel that might put your inheritance tax relief status in jeopardy.
Okay, that's quite a range of different points there. Let me start with what we have in mind. So, because if we clarify that a bit, then maybe some of the worries will go away. I have to be careful here because there are some potentially commercially sensitive issues, which I'm sure you'll understand. But we, Increasing Matrix, which is one of our smaller businesses, we trade through about 140 distributors in roughly speaking 90 countries around the world. Most of our relationships, but not all, most of them are mutually exclusive arrangements. And effectively, those distributors are our sales forces in countries as far afield as the Philippines, Argentina, Mexico, Turkey. What we have found is that our performance in these markets is substantially affected by the strength of the distributor. Some of those distributors are looking for investment, and some are reaching their owner-managed businesses, reaching sort of retirement sort of questions. And so there is the potential for us to get involved initially, maybe on a sort of partnership type basis. When I say partnership, I mean minority stake, gradually moving to a controlling stake situation. We already have our own distributor in India, for example, and we've done that, say, 3-4 years ago because India was such a difficult market to find a decent distributor. We decided to do it ourselves. We've taken the steps to do the same in the UK, where we're greenfielding our own distribution business, and we'd be interested in doing that in other parts of the world along the lines that I mentioned. So it will be relatively small, gradual steps. We'll do it in partnership, so the conflict of interest point, I think, disappears. Only we do it with people who really want us to become part of their business, and it will help us take control of the customer interface and the selling process in Matrix. So as far as IHT issues are concerned, I don't think it's any chance that it will jeopardize. I mean, we don't know what the rules of the road will be for IHT down the road, but I don't think currently that if we did what we're talking about, it would affect the IHT status at all.
And I feel it would be a fairly minor part of the business, so it shouldn't.
Yes, it's a small within our overall portfolio. It's probably only about 20% of sales. So it's a small part of the business.
Yeah. Somebody's also asked, clearly for years now, as long as I've known you, you've been effectively the executive chairman. They probably feel as the company grows, more acquisitions, will we have eventually maybe an independent chairman? Is that something you think might happen?
Well, I think it's possible. Clearly, as we grow, we've got to think, and we have actually one of the reasons the profits aren't as they might have been is we've added resources at the centre. We've brought 3 additional people in, and we'll need to continue to strengthen our resources at the centre. So, yeah, I think if we achieve what we are setting out to do, investors should expect to see some changes at the senior management level to cope with and manage the future development of the group.
Another question here is, it's good to have a range of products and divisions with customers across different geographies, but all parts of the company are rarely firing on all cylinders, and I suppose in different sets of results we've seen that. Do you expect that to continue to be the case? So you're sort of covering the downside a little bit, you're also maybe not getting a period where you have really good upside?
Well, the experience of the last few years would suggest that is the case. We're not diverse in terms of our technology and our production processes and all of the operational setup, but we are quite diverse in terms of end markets served, both in terms of products and in terms of geographies. So that gives us a lot of diversity, which makes us a very defensive investment. But I suppose it does mean that we get hit. We never get fatally flawed, it seems, but we do get a few scrapes from time to time. So right at the moment, emerging markets, oil and gas and mining are affecting us, I'm afraid. Will we fire on all cylinders simultaneously? I'm sure we will at some point in time. We had a very good half year. I think it was 10-11. That second half of 10-11 was a very good half year when everything seemed to go in our favour. But I think sensible shareholders will see through all of that and recognise that there's defensive aspects to our business which may limit us a little bit on the upside.
Also, someone has said the level of adjustments that you make in your accounts seems to always appear every set. Although they're transparent, it seems that the adjusted profits and EPS figures clearly are going to be affected. So, will the adjustments ever sort of effectively fall away? Yeah.
Well, the adjustments that we make are ones that we discussed pretty much at the time of listing with our brokers and the analysts at the time, and have been really well understood by our institutional shareholders over the years. And they're the sorts of adjustments that they would expect to see. So amortization, for example, unrealized FX gains and losses. As you say, all of this is very transparent. But we do what we do because it is what is expected in the institutional investment community. The only area that I think can be a bit grey is what we classify as exceptionals. It depends what goes in there and what doesn't go in there. But again, we're transparent and we're always happy to talk about those. I suppose we take the view that if you're an acquisition vehicle, you're likely to have quite a few of those things going on, quite frankly. And we take the view that that's just part of our business. We're transparent. People can read the results whichever way they want, and people make their own judgments. I don't think they're going, all the time we're making acquisitions that are material in the context of the group overall, I don't think they're going to go away, frankly.
And I mean, you mentioned dividends there. How much, and also the institutions, which is probably more than half of the register that you have. Sure. How much are you influenced by what the larger shareholders want? I mean, we like dividends as well, of course. Individual investors love them, but there probably becomes a point where if you're making acquisitions, we'd probably be a little bit softer on the dividend and not worry if it increases. I mean, you've had some wonderful increases every year, the last 4 years, but you say still progressive in the results, but maybe it won't be quite as big jump as you've had in previous years.
Yeah, I think you'll see that in the results. The dividend announced is only a 10% increase as opposed to the prior year it was a 25% increase. So I think that's fair enough. What do we see institutional shareholders wanting? I wish I could say there was one clean and clear and easy answer to that. I think it takes a lot of differences of opinion to make a market, as they say, and that is one issue that we get different views from different shareholders. So we've taken the view that we didn't pay dividends for a long while, certainly post-listing and through the crisis for reasons that I think everyone understood at the time. But as soon as it became possible to do so, we thought that our shareholders, in a way, deserved something back. And it gives the share price an extra solidity and the company. We do generate a lot of cash, and we can afford to pay decent dividends, and enough shareholders like that for it to be worthwhile. We do get some shareholders, institutional shareholders, say, "I don't understand why you're paying dividends. You're an acquisition vehicle. You should use all your money for acquisition." Yeah.
It's because it's in their growth fund.
Yeah.
You just never know.
There's an economic rationale for that. I mean, it's sort of pure economics says they're right, but the world isn't made up. The world is more practical than that. So.
For what it's worth, I always see it that you have the scope for growth, but you also pay a very nice, sensible dividend. It's good to have both, and it keeps me warm when things are not always warm out there. Right. One of our investors has asked here, why are the non-execs included in the LTIP, as they feel that's against the corporate governance code and it's jeopardising their independence?
Well, let's start off with why did they get included. This comes back to what do we see as the primary role of non-execs in our type of business, growth-orientated, AIM-listed company. The primary role for us, for the non-execs, is to help us grow, whether it's by virtue of their experience or contacts, general knowledge of how to do that sort of thing. So We want them to be focused on that. They have a secondary role, which is a governance role, and they exercise that role as well. But in our view, in our sort of business, it's a secondary role, important but secondary. So when it came to thinking about the LTIP, which is about getting everyone focused on growth and focused on making investments and looking to the future, we wanted everybody to be in the boat rowing in the same direction, basically. Now, what we've been sort of careful of is not to include the non-execs to a point where it would make them make rushed and rash decisions. So in terms of threatening their independence, one has to remember that our 3 non-execs are actually very wealthy men in their own right. I have no idea what their net worth is, but I know it's substantial in each case. And I think the maximum they could make from the LTIP probably is in the region of £100,000. Now that's a lot of money, don't get me wrong, but I don't think if you knew the individuals, that sort of potential amount is going to colour their thinking and make them do things that would be inappropriate and risk their reputations in an AIM-listed business of our sort. So that was how we thought about it. Best to include them, get them thinking about growth and how to develop the business, but not turn their minds towards making the wrong sorts of decisions.
That's interesting because most investors that we liaise with, all the private investors, they think it's the Remuneration Committee put forward the proposal to the execs. Your thinking has been the other way around. It's we feel that we should offer the non-execs something to reward.
Yes. I suppose the way that the LTIP and most things, I think it's not just our business, but I think in most businesses, it is up to certainly when we're thinking about a long-term bonus scheme which applies to 35 senior managers across the group, it's up to us as a senior managing directors of the business to come forward with a proposal. We put that early stage proposal to the non-execs, and they thought it made sense. And as we developed it, we said to them we would like to include them. And I suppose that may be a difference at Plastics Capital, I suppose. But I think it's really a good idea. I mean, without doubt, the best thing to have people like Keith Butler Wheelhouse and Andrew Walker and Richard Vesey doing, the best thing to have them doing is helping us figure out how to grow the business, rather than worrying about the minutiae of something on the audit report or whatever. Those are. Don't get me wrong. I'm not saying those are unimportant things, but in the scheme of things, if you're worried about that sort of stuff, then you've probably got the wrong management in place, quite frankly.
So do you think they would have been offended if they were left out?
No, I don't think they would have been offended, but I think they would have. I tell you what, it would be difficult to recruit the same calibre of people if we didn't have the mindset that I've articulated. The mindset is when you're trying to encourage someone like Keith to join the group, as we did 3 or 4 years ago, is come on board, be part of it. Give us your benefit of your experience. Guide us as well as control us, but guide first, control second.
I find I'm always in a difficult position because I get to know management. I like to ask questions.
Sure.
In fact, when I mentioned the LTIP to you at the very early stages, you said, come on, let's have a meeting and we'll sit down and go through it, which is great, and it's the right way to do it. I think investors on the outside tend to read clear black and white and wonder why some things like that. They don't get to meet the non-execs for sure, and that's probably why they ask a question. They see it's unusual. So.
Yes, I think it is, and I understand that.
Yeah. I suppose one way of looking at the overall picture is always to try and see what's happening into the future. Is there anything that sort of keeps you awake at night, as they say? Anything that you would think, I hope that happens or doesn't happen to protect the company?
No, I think on the downside, there are relatively few things that I really worry significantly about. Obviously, we keep monitoring everything, but there are no, touch wood, there are no big sort of issues. The thing that keeps us, I'm not sure it keeps us awake at night, but the thing that we focus on and concentrate on all the time at the moment is how do we get the growth moving further forwards faster. We want to grow 5 to 10% top line per annum. That'll translate into much more significant growth at the bottom line. That actually coming back to the LTIP, that's how the LTIP is going to benefit the senior management group, and that's what will benefit the shareholders, and that is what we're focused on. It's a really, really critical variable for us.
Yeah, and just to remind investors, the good news is here the LTIP set at a level where if you do hit target, then investors will be very happy anyway.
Yes, that's right. And we have to achieve a minimum hurdle before any of the senior management get anything, and that hurdle translates into a 13% return, I think, dividends included for shareholders. So it's the guys have to do a good job basically to get something.
And finally, a question of China. I mean, it's one of those things that investors look at and think, it's a different world working with China and getting involved in China. And as investors, we've had lots of problems with companies that are based in China. How's your feelings of how it's gone with China so far?
Well, it hasn't been plain sailing. We certainly, the mere fact that we only paid half of the expected amount for the acquisition we made there shows you some of the difficulties of operating in that market. But we are happy with the 60, 70 people we've got and the 2 operations we have there. They're beyond scale, sort of minimum critical scale. We've got some good plans for the operation in Shanghai in particular. And we think that China's going to be an important market over a 5, 10, 15-year views. And you have to, in our sorts of business, you have to take that long-term view. It's quite difficult there at the moment. The market's not great, but I expect that'll be one that'll turn sooner than some of the other markets we've been talking about, for example. So we're okay with what we're doing in China. Okay.
Great. Well, Faisal, thanks again. It's 3 years, I think, since the last filmed interview we had. Maybe a bit of a shorter gap for the next one.
Yeah. Thank you very much.
Thank you very much.